Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, January the 24th, the year 2018. Keeping It Simple 3, Part 3, the third in the series. I think I'm going to keep doing it for the week. I think it's something that we need to focus on. In fact, it's kind of funny how when you focus on something or you're thinking about something, you start to see it everywhere. And I have a stack of books I need to read. I've been watching lots of videos. If you ever watched my movies I've watched, YouTube videos, but DVDs I get from the library. But I also read books, and in fact I need to do a book review today. So I started reading a new book. I think I've got 3 or 4 in the stack. And I picked the one called The Slight Edge. And it was pretty interesting book. And I think it's the 8th anniversary edition. And I kind of remember reading, I think I read the other one before because I recognize the author's name. But this isn't about a book review per se. There was something in there, and he's basically talking about keeping it simple. And the difference in The Slight Edge is that he says you already know what you need to do, which we all know what we need to do, whether it's taking care of ourselves, physically, how we eat, exercise, what we put into our bodies, how we use our bodies. We all know that. Yet, the majority of Americans are obese. Some morbidly obese. You get diabetes running rampant. And there's a lot of books out there and motivational speakers. They try to motivate you. They try to get you to form good habits. They try to, get you to have more willpower and discipline, all this stuff. But he says it comes down to something really simple, and that is choices. Because part of the premise is, see, the things we need to do are simple and they're easy to do, but they're also easy not to do. And it's kind of like trading. I mean, if you think about it, it is so easy not to do your money and risk management. It's so easy to skip this simple calculation, because if you're going to use the same position size and you're going to the risk, then the stop loss is going to be pretty much the same unless you have a really big win and it kicks your account size up. And so maybe if you're using percentage, now the stop loss, the position size can increase. But if you're using the same dollar amount, then it's going to be fixed. So the point is, this is something that's easy not to do. It's easy not to look at your news feed or the sites you look at to see if there's news coming up. It's so easy not to do that. It's easy not to write down your daily checklist or your trading checklist and check off each item before you enter the trade. It's so easy not to do it. But we all know we're supposed to have a written trading plan, money management, etc., etc. It's easy not to do. So that's the point. It comes down to choices. It's simple. In most cases, it's easy. It's easy to do, and it's easy not to do. Now, yesterday, I got a little carried away, and I believe I was showing you... Where is it? I was showing you this chart, which is the my new tick indicator, and it hasn't. I released one, the 2018 tick chart, but I've done some mods, so that's going to come out in batch 2. But if you press the F9 key, you can bring up the tick chart here. And the observation that I made was you can tell direction of price by what happens. What just happened? You see here, the bid went above this valley right here. So from right now, we've got the market going up. Okay? And now it just went here. Now we've got the market going down. And you could say, well, you could get chopped up there. And whoever said that would probably be right. Yeah, you could get chopped up. But the thing is, you can use this to decide which way you should enter or when to enter. So for example, right here, now we've got the market going back up. Because you see, the market can't go down unless the bid comes below the ask. I'm sorry, unless the ask comes below the bid. Do you see that? The market can't go down unless this line comes below that peak. It can't. You see how it just did though? So we've got something going on right now in the market. That's why I'm shooting the video a little on the early side, because it's simple to jump in, but when I look at the charts, it's like, wait a minute, something's going on. I don't know what's going on. I'm going to stand aside for about at least another 20 minutes and let this hour play out. And then I can enter the trade, probably do a reversal off of a top. But you can see here, the market's going down, and the market won't go up until what happened right there. But something's weird though. Why is this the pound when it should be the euro? How'd that happen? But you see here, market's going, won't go up until it breaks that. So you see here, see something's going on. I don't know what it is. I'm not trading in this craziness. Right there, we had another reversal. Right, see that? See, prices keeps reversing. So what I did was, I realized that you can trade off of this and it's good for scalps, but you're also losing some information that you may need. So what I decided to do was put that code, and I made a spread dots indicator. I've got the original one, but I decided to put it. And so we've got the right here, we've got the valley, and right here, the red, we've got the peak. So right here, when the ask crosses below the valley, I'm sorry, when the ask crosses below the peak, you want to go short. When the bid crosses above the valley, you want to go long. And so you see here, it formed another valley. You see there, it formed a valley right there, and then price shot above it. This green line's the valley. But to me, I can just use these and trade off of those. Well, there was a nice turnaround at the 5-0. See, once again, sometimes simple trades are the best. So let's just scan through the normal charts here. We can see the weekly. See, we broke through the high at 23.22. We're 23.63, 62, and as you can see, that's 40 pips in the pocket. On the daily, once again, broke through yesterday's high, And you can see that's 56 pips, 55 pips in the pocket. And you can see it got some really nice ranges here. And I noticed that the dollar yen lost to 110. Pound, 185 pips past the open. And so here we go again, a buy zone trigger and maybe a little heat. Maybe you stopped out there, but yes, you got it all back and then some. Once again, simple. You know, and it really, I mean, think about it. It's easy to click the mouse. It's not that difficult clicking the mouse and entering a trade. But I mean, can you just stick with one thing? Not get caught up with the new latest toy. Here we go, green rat zone, red rat zone. So right here you could see this was the high, so the zones overlapped. So there really hasn't been a rat zone trade until now, and that's what I'm going to look for. It's a rat zone coming this way. And for you pivot traders, you can see here you got a missed pivot, but see back here, there's your weekly open, but here's your pivot, and you see it took it, hit it that day. No, actually no, that's the weekly open. Where's the pivot? Okay, we took out the pivot. That's the weekly pivot. Trying to find the daily pivot. Oh, I think it's this line right here. Yeah, purple line. So we hit it here, we hit it here. We haven't hit this one. So the 2286 is a number, I'm sorry, 2275. There's a number to be looking for in the future, or it might stay missed for a long time. Price action trade, once again, simple. See, we're 7, 8 pips off that high. Look for a retest and then a drop. Simple price action. Here we go, yesterday's 5 lines, and as you can see, it just cut right across them. You can see we got holo zone. It's crazy here. This is just crazy. And on the week, and I do believe, talking about the week, we still have 2 gaps that haven't filled. And they're both on the Canadian pairs. That's interesting. $145 pips below. Doesn't look like that gap's going to get filled. Does not look good to fill that, like that's going to happen. So price action, okay, 5 lines from yesterday. We got the wick zone. As always, price doesn't like staying in the wick zone, and you can see we've got a holo zone here, but in 15 minutes we're going to get a new highest open, and that's when you can look for that pullback. And the squiggly people, there you go. Right here, oh, this was the TRO, the updated HL5 indicator. I guess I could probably take this chart down, but you can see here we're in the rat zone. And once again, watching the tick chart. And in case you're wondering, this is the number of ticks that have been selling. So in C50, so it's just, that's how long it's been selling in ticks. And there you have it, fellow traders, keeping it simple. So you can pick one of those horizontal lines, simple trade, just trade in the direction of the cross. You don't need something fancy. You don't even need any of the indicators. You can just draw a horizontal line on the chart and trade what you see. But remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.